Hello everybody. In this video we are going to discuss about Ind AS 105, that is non-current asset held for sale and discontinued operations. So let's start with this standard. Firstly, the introduction goes to Ind AS. This standard is applicable to all assets which is non-current assets. Non-current assets will be maybe property, plant, PPE, intangible assets, investment property, goodwill of business combination. This standard is applicable to all except this. Whenever the criteria for classifying existing asset value for sale, then we need to use this standard. What this standard explains? This standard prescribes accounting for non-current asset held for sale, which is held for sale, or disposal group for held for sale, or and disclosure. So how we can disclose the entry. Now non-current asset held for sale means simply it means scoped in non-current asset whose value will be recoverable through sale rather than use. If we use the asset, we produce the amount, it will become the PPE. If we are selling that asset, means we are going to get the amount by selling, then it will come under Ind AS 105. If we are using the asset, we are getting the amount, it will become PPE. It will become Ind AS 16. Now another one will be disposal operations or disposal group. Disposal group means simply it means group of asset. So some group of asset or some liabilities we are going to dispose. We are going to dispose in features. We have some asset we need to disposing, or we have discontinued operations. Discontinued operation means simply it means a division entity which is classified as held for sale, means some conditions were there and that conditions were satisfied. In future we are going to discontinue these operations. Simply this Ind AS prescribed. Now accounting, what the Ind AS is prescribed? Simply the accounting for non-current asset held for sale or disposal group of asset or discontinued operations. Non-current asset held for sale, disposal group, discontinued operations. Now classification of non-current assets or disposal group as held for sale. So now non-current assets classification, when we need to classify it as disposal or non-current asset held for sale, whenever we have available for immediate sale in its present conditions, we need to see the present condition. As same in the present condition we are able to sell, that is if regulatory approval is pending for sale on asset, then that asset is still considered as available for immediate sale. The sale is held for classified as held for sale, the asset will be provided. And sale is highly probable, must be sale is highly probable, then that assets will be measured at how we can measure lower of carrying amount or fair value less cost to sell of the lower of this amount, and this fair value less cost to sell is lower, then the different amount is recognized as impairment loss as per is 105. Now here for example, if we are depreciation or amortization shall immediately stop on such asset from the date of classification of held for sale. Depreciation will cessation of depreciation on such asset. Now a disposal group, if disposal group is measured at same carrying amount of disposal group or fair value less cost to disposers. Here any impairment loss on disposal group as per Ind AS will be borne by the scoped in non-current asset only if it is in some order preference. First we need to allocate to goodwill, and after the goodwill we need to up to the carrying amount of goodwill, or remaining impairment loss of disposal group will be borne by all other non-current assets. It is in the ratio of their carrying amount will be considered. And after that, here if non-current asset held for sale is acquired in business communication, then is measured at fair value less cost to sale. And now subsequent measurement at each balance sheet. At each balance sheet, we are classified key in provided measurement changes was happened, presentation and disclosures was there, and disclosures will happen discontinue operations. Okay, now same whatever we are done at starting, we need to check out on every balance sheet data, means what is the carrying amount or fair value less cost to sell. We need to check out on every reporting data. In case of disposal group or reversal of impairment, loss of disposal group will happen, then we need to scope the non-current asset disposal group excluding the goodwill. So we cannot reversal of goodwill impairment loss. Now we have measurement provisions. Ind AS is not applicable to 112, 19, 109, 41, 104. Now it's okay. We have changed to plan of sale. We are, if non-current asset or disposal group classified as L for sale. We have L for sale, meeting the criteria. Whatever the criteria is met, that was classified as L for sale. Now we are reclassifications is happening. The entity should cease to classify non-current assets as L for sale. On this date, it should be measured at carrying amount on the date of change in plan if the asset were never classified as L for sale. That is, any different amount is transferred to profit and loss account. Any amount is transferred to profit and loss account. Now, how we can present this non-current assets classified as L for sale and discontinued operations? How we can classifications was happen for we need to a classification of non-current assets L for sale or distribution. So if for example non-current assets L for sale, these items in balance sheet we need to present as separate line item need to present for if it is a disposable. So disposal, if it is a disposal, if the present assets of disposal group separate from other assets, so we need to, from all assets we need to separate the disposable assets. From all liabilities separate the disposable liabilities. From assets and liabilities of disposable goods should not be, these assets shall not allow to net off the position of these assets. Or another case will be discontinued operations. We need to present assets of discontinued operation from asset to discontinued operations. From liabilities discontinue liabilities, and we should not set offset these balance sheet items. Now after that whatever the post tax profit or loss of discontinued operation should be disclosed separately as single amount from profit or loss from continuing operation in profit and loss account, and EPS will be disclosed separately for discontinued operations. Discontinued operations will be separately, we need to mention this amount. Presentation part there. Present the non-current assets L for sale from the disclosure. Present the liabilities disclosure of classified as L for sale separately. We should not offset it. Offset is not allowed. Separate disclosure major class of assets and liabilities, cumulative incomes and expenditure. We need to disclose it separately. Description we need to provide disclosure of non-assets and fact and circumstances, gain and loss we need to provide. Discontinued operations, component of entity are classified as L for sale, either been disposed, or we need to provide the separate major line items, subsidiaries acquired or discontinued operations, and presentation will be separate presentation will be required for this case. And after that here whatever the changes value of non-current assets and any adjustment was happen, we need to take out into P&Ls. Now firstly we are started with Ind AS 105 summary. Simply Ind AS is applicable to all assets except some assets. Here we are discussed about only three items. One is non-current asset held for sale, another one is discontinued group of held for sale, and another one will be discontinued operations. And the how we can classify held for sale, fair value less cost to disposal or carrying amount, whichever is lower we are considered. And classification of non-current assets, here only the asset have conditions was satisfied and highly probable in its present conditions. So any present conditions available in for immediate sale, and it has present conditions even though it has a regulatory approval is pending, it will be considered as sale, and sale is highly probable, then only we should consider it as classification for non-current asset held for sale. And the assets depreciation or amortization should immediately stop to such assets. You need to see the depreciation whenever the asset was classified as this held for sale. Now disposal group also method carrying amount or whatever the carrying amount or fair value less to disposal, whichever is lower. And subsequent method also happening if we are change the plan, change the plan of sale or plan of distribution to owners. Then what we are doing, if non-current assets classified as held for sale no longer meet the criteria, then entity should cease to classify that non-current asset held for sale. On this date we should whatever we measure the carrying amount on the date of change of plan if the asset was never classified as held for sale. If it is not classified as held for sale, what is the amount, and we need to see the different, and the different will be charged to profit and loss account. And what is the disclosures, presentation disclosures will be happen for these cases. For held for sale, classified as held for sale, we need to consider it as from non-current asset held for sale. Present the separate line item will be provided in the balance sheet, sale separately provided. And whatever the amount disposal group present assets of disposers separately from other assets, liabilities separately from other liabilities, and assets and liabilities will not be allowed to offset, will be not allowed. And discontinued operations presentations will be simply the amount whatever the discontinued operations separately from other asset, liabilities from other liabilities, we should not allow the amounts. And the like profit and loss amounts, post tax profits or loss of discontinued operation should be disclosed separately as single amount from profit or loss of continuing operations of firm. And EPS, earning per share, will be disclosed separately. It is the property which we are discussed for Ind AS 105 held in non-current asset held for sale and discontinued operations.